Welcome to the deep dive. You know, taxes can feel like a puzzle, right? But some puzzles have extra tricky pieces, especially for clergy and religious workers serving our communities. You're probably listening because you want to get a real handle on this. So today, our mission is to crack open IRS Publication 517. It's the key guide here. We're going to pull out the absolute must-know info and honestly some surprising details. Think of this as your fast track to really understanding how to file and how to optimize things.
Exactly. And it's not just about checking the right boxes. It's really about grasping the specific rules so you can make, well, really informed financial choices, especially around those tax-saving opportunities that are pretty unique to your role.
Okay, let's jump right in. First big piece. Publication 517 hits us right away with this core difference for Social Security and Medicare taxes. FICA versus SECA. What's the big picture here? Why does this matter so much?
Well, it's fascinating because the IRS often treats ministers quite differently than your average employee. See, for most folks, you've got FICA, the Federal Insurance Contributions Act. Your employer takes out half the Social Security and Medicare tax, and they pay the other half. It's shared.
Right, standard setup.
But for ministerial services, the earnings usually fall under SECA, the Self-Employment Contributions Act. And that means you, the minister, you're responsible for, well, all of it, both the employee and the employer parts.
Wow. Okay.
Yeah, and this is true even if your church thinks of you as an employee for, say, income tax withholding. It's a critical point. A lot of ministers miss this, and it can really hit your take-home pay because you're essentially paying almost double into Social Security and Medicare compared to a regular W-2 employee.
That really is a huge difference. So you're looking at the full SE tax at higher rate. But the publication does hint there's a way out for some people, an exemption from SE tax. And this feels like where we find a really powerful tax-saving angle.
Oh, absolutely. Publication 517, especially if you look at Table 1, it lays out who's covered how and who might qualify for these exemptions. Let's break that down. For ministers and also members of a religious order who haven't taken a vow of poverty, your earnings from ministry are generally subject to that SE tax, unless, that is, you go through the process and get an approved exemption. Now, where it gets really interesting is for members of a religious order who have taken that vow of poverty. Generally, they're exempt from SE tax for the services they do as an agent of their order.
Okay.
And those earnings. They're actually seen as the income of the religious order itself for income tax, so tax-free to the member. But there's a twist. If the order decides to elect FICA coverage, they file a Form SS-16, then those services are covered, and the order pays both halves of the tax. And it's also really vital to remember if a member does work outside the order, not on its behalf, those earnings are taxable to them personally.
Got it. So what about other religious roles? Are they similar, or do they have their own specific rules?
Good question. Christian Science practitioners and readers are kind of like ministers in this respect. Their professional earnings are generally subject to SE tax unless, again, they get an exemption. Then you have religious workers who are, mostly common law church employees. Their wages usually fall under FICA, the standard system.
Okay, like regular employees.
Mostly. But here's a less common but important situation. If the church files Form 8274 to exclude its employees from FICA, then that employee's wages suddenly become subject to SECA, to self-employment tax, if they make more than $108.28 in the year.
Whoa, okay. So the church's choice impacts the employee directly there.
Exactly. And the only way out for that employee is if they qualify for an exemption as a member of a recognized religious sect. These individuals have a very specific, very broad exemption available. They can apply to be exempt from both SE tax and FICA taxes.
Okay, this whole idea of getting exempt from SE tax sounds like a massive potential tax saver. You're basically skipping that double tax rate. Let's really dig into who qualifies and, maybe more importantly, how you actually navigate that application process. Seems like strategic choices here could make a huge difference.
It truly is a pivotal point, yeah. Especially for long-term financial planning. Pub 517 outlines two main ways to get an exemption. First, for ministers, members of religious orders without the vow of poverty, and Christian Science practitioners, readers. The IRS form for this is Form 4361. Now, to qualify, you have to be genuinely opposed to public insurance, not just because you want to save money, but based on, deeply held individual religious beliefs or your denomination's official principles.
Okay, conscience-based.
Right. Ministers also need to let their ordaining body know. Filing means sending the form, in triplicate actually, to the IRS. Keep an approved copy safe. The timing here is super precise and really important. You have to file Form 4361 by the due date, including extensions. For your tax return for the second tax year, you had at least $400 in net earnings from ministerial self-employment.
The second year you hit that $400 mark.
Exactly. And those 2 years don't even need to be back to back.
Oh, okay.
Once it's approved, the exemption usually applies to all tax years after 1967 where you met that income threshold. And here's the critical part. It's irrevocable.
Irrevocable. Wow.
Yeah, this isn't a decision you can easily undo. If you get approved and you realize you overpaid SE tax in prior years, you can usually file an amended return, Form 1040X, to get a refund, but there are time limits. But here's a crucial warning. If the IRS hasn't actually approved your exemption by the time your tax return is due, you still owe that SE tax. You can't just assume it'll be approved.
Okay, timing is everything for that first group.
Yeah.
What about the other route? The one for members of recognized religious sects?
Right, that's the second path. For members of religious sects, they use Form 4029. This exemption is incredibly specific. The criteria are really strict. As a follower, you have to be conscientiously opposed to getting benefits from any insurance, public or private, covering death, disability, old age, retirement, medical care, the whole package.
Any insurance. That's broad.
Very broad. And you have to formally waive all your rights to Social Security benefits based on your earnings for yourself and anyone else who might claim based on your record. Plus, the Commission of Social Security has to determine that your specific sect meets certain requirements, like having established teachings, a history of providing for its members, and existing since December 31st, 1950.
So the sect itself has to qualify too.
Exactly. You file Form 4029 with the Social Security Administration, the SSA, and your sect actually has to complete part of the form. Unlike Form 4361, you can file this one pretty much any time. It usually becomes effective for all tax years starting when you first met all the eligibility requirements. Now, all this talk of exemptions brings up a really important consideration for anyone thinking about this. Why wouldn't someone want to be exempt?
Right, it saves money now.
It does. It's a significant immediate tax saving. But electing out means you're giving up your eligibility for those crucial long-term benefits. Social Security, retirement, survivor benefits, disability benefits down the road. It's a very big trade-off to think about carefully.
That is a huge decision with really long-term consequences.
Okay.
So whether you're paying the SE tax or maybe thinking about an exemption, you absolutely have to know how to calculate your net earnings correctly. And what's fascinating here, like you said, is how different income and expense items get treated, which again impacts your tax bill and maybe reveals some saving opportunities.
Yeah, understanding this calculation is it's central for accurate filing and for finding those savings. Most people use what the IRS calls the regular method to figure out net earnings from self-employment. When you're figuring out your gross income specifically for SC tax, here's what you absolutely must include. Obviously, your salaries and any fees you get for ministerial services.
Okay.
Offerings you receive directly for things like performing weddings, baptisms, funerals, that's different from offerings given straight to the church.
If it comes to you personally.
Right. Also, the value of meals and lodging provided for your employer's convenience. And here's the big one, the real aha moment for many. The fair rental value of a parsonage that's provided to you, including utilities and any rental allowance or housing allowance paid to you.
Wait, even the housing allowance that might be tax-free for income tax.
Exactly. This is so crucial. These amounts are included when you calculate your SE tax, even though, as we'll discuss, they can often be excluded for income tax. Think about, say, Pastor Leslie Adams' example in the publication. If their salary is $39,000 and the parsonage value is $12,000, their starting point for the SE tax calculation is $51,000.
That's a big difference.
It really is. Also, you have to include any amount the church pays towards your income tax or your SE tax, unless it was just withheld from your salary anyway. Now, for allowable deductions for SE tax, you can deduct all the ordinary and necessary expenses that are directly related to your self-employed ministerial work. Things like mileage for visiting parishioners, maybe supplies for preparing sermons, office expenses related to performing those weddings or funerals you got paid for directly. Usually these go on a Schedule C, profit or loss from business. But here's an important distinction. If you're considered a common law employee getting a salary from a church, you actually subtract your allowable ministry-related expenses directly from those wages and report the net amount right on Schedule SE. You don't necessarily need a full Schedule C for that income.
Okay. Streamlined a bit.
Yeah. And watch out for expense reimbursements. Know if your church uses an accountable plan where reimbursements usually aren't on your W-2 if they match expenses, or a non-accountable plan where the reimbursement is included in your W-2 income and then you have to deduct the actual expenses yourself. Now, for the ISSE tax rates for 2024, the maximum earnings subject to the Social Security part is $168,600. That part's taxed at 12.4%. The Medicare part is taxed at 2.9%, and that applies to all your net earnings. There's no cap on that. So the combined SE tax rate is 15.3% on earnings up to the Social Security limit and 2.9% on earnings above that. Plus, there's that additional Medicare tax. It's 0.9%, and it kicks in on your combined Medicare wages and self-employment income once you cross certain thresholds, like $250,000 for married filing jointly, $200,000 for most others. There's also something called the non-farm optional method for figuring SE tax. It's less common, usually for folks with really low non-farm profits. It has a lifetime limit, but it can help maintain Social Security and Medicare coverage even with low income.
Okay, so this is where the puzzle really starts showing its strategic side, right? We've got items included for SE tax that might be treated totally differently for income tax, and that's where the real opportunities to cut your overall tax bill seem to lie.
Precisely. Yeah, if we connect all this to the bigger picture, while SE tax has its own specific set of rules, the income tax side offers some really substantial, often quite surprising benefits just for ministers. Understanding these is absolutely key to maximizing your tax savings.
Okay, let's get into those income tax specifics.
Let's look at income items with those powerful exclusions or deductions. First, offerings and fees. Like we touched on for S-tax, if you get offerings directly for services, weddings, funerals, they're taxable income to you. But if those same offerings are given directly to the church or religious institution,
Yeah.
not taxable income for you. Simple distinction, but important.
Right.
Similarly, if you have outside earnings from another job, you have to report that income. But if you then donate those earnings back to your religious organization, you might be able to take a charitable contribution deduction for that amount. Check Publication 526 for rules on that.
Yeah.
Okay, now, for arguably the single biggest tax-saving opportunity for ministers, the exclusion of rental allowance and fair rental value of a parsonage.
This is the big one.
It really is. Ordained, commissioned, or licensed ministers performing ministerial services can exclude either the rental allowance they receive or the fair rental value of a church-provided parsonage from their income tax. Remember, this amount is included for calculating SE tax, but it's tax-free for income tax purposes. That's a huge benefit.
How do you make sure you qualify for that exclusion?
Critically, the payment must be officially designated as a housing allowance by the employing church or organization before it's actually paid out. That formal designation is key. And the amount you exclude can't be more than what's considered reasonable pay for your services, nor can it exceed the actual fair rental value of the home plus utilities. But here's the real aha moment, the thing that surprises so many people. Even though you're receiving these funds tax-free to cover your housing,
Yeah.
you can still deduct your home mortgage interest and real estate taxes paid on that home as itemized deductions on Schedule A.
Wait, really? You get the tax-free allowance and the deduction?
Yes.
Yeah.
It's a powerful double benefit, almost unique in the tax code. It can save you a significant amount on your income taxes.
Who qualifies for this? Is it just pastors?
It's fairly broad. It applies to ministers performing ministerial services, administrative duties, teaching at theological seminaries, even certain government employees like chaplains, although military chaplains have their own specific rules. It can also apply to teachers or administrators in church schools, traveling evangelists, cantors performing religious functions, as long as they meet specific criteria related to ministerial duties. Now, let's flip to expense items and how deductions work, especially with that housing allowance. There's a critical nuance called expenses allocable to tax-free income. If you receive that tax-free rental or parsonage allowance, you generally cannot deduct the portion of your otherwise deductible ministerial expenses, things related to your ministry work that are considered allocable to that tax-free income.
Okay, how does that work?
Basically, you figure out what percentage of your total ministerial income, salary plus housing allowance, is made up by the tax-free housing allowance. Then you apply that percentage to your total ministerial expenses. That resulting amount is not deductible for income tax.
So it reduces your income tax deductions.
Exactly. But crucially, this reduction does not apply to your SE tax deductions. You still get the full deduction for SE tax purposes.
Ah, okay. That's tricky.
It is. You need to attach a statement to your return showing this calculation. Publication 517 actually has worksheets that can help walk you through it. A couple other key deductions on the income tax side. You might be able to deduct self-employed health insurance costs on Schedule 1. Generally, you can't if you are eligible for a subsidized plan through another employer or spouse, though. And finally, don't forget that significant income tax deduction for 1/2 of your SE tax. You deduct half of the SE tax you calculated on Schedule SE when figuring your adjusted gross income, or AGI, on Schedule 1. Just remember, this is an income tax deduction only. It doesn't reduce the earnings you use to calculate the SE tax itself.
Yeah. These nuances around how income and expenses are treated differently for SE tax versus income tax, that's where this deep dive really pays off.
Yeah.
Knowing what you can exclude, what you can deduct, and importantly, where to deduct it, seems absolutely key to strategically managing your tax bill and finding those hidden savings.
Absolutely. And that brings up a natural question. Beyond just the annual filing, how do these rules affect your longer-term financial health? Your tax planning. Retirement savings arrangements are really crucial here, and again, there are specific rules and opportunities for clergy.
Okay, what should we know about retirement?
Well, for self-employed retirement plans, think SEP IRAs, simple IRAs, or qualified plans like a KEO or a solo 401k ministers who are genuinely self-employed, maybe getting fee-for-service income reported on Schedule C. They can set these up. But it's important to remember, those salaried church employees, even though they pay SE tax, they're usually considered common law employees for retirement plan purposes. Meaning they typically cannot set up these specifically self-employed plans based on their church salary. They participate in whatever plan the church offers, if any. Of course, individual retirement arrangements, IRAs, both traditional and Roth, are pretty much available to everyone with earned income. For 2024, the general contribution limit is $7,000, or $8,000 if you're age 50 or older. Just keep in mind those AGI limits for contributing to a Roth and the rules about deducting traditional IRA contributions if you're covered by an employer plan.
Standard IRA rules apply there.
Right. Then there are tax-sheltered annuity 403(b) plans. These are very common and valuable for employees of nonprofits, including churches. Church employees, members of religious orders, ministers, chaplains, they can generally participate if their employer offers one. Contributions are often pre-tax, excluded from income, unless they're Roth 403(b) contributions. Or they might be deductible on Schedule 1 if you happen to be self-employed making contributions, or if your employer doesn't exclude them. And beyond the plans themselves, there's a really powerful retirement savings contributions credit, often called the Savers Credit.
A credit, not a deduction.
Exactly. A tax credit, which is much more valuable because it reduces your tax bill dollar for dollar, not just your taxable income. You could get a credit of up to $1,000 or $2,000 if you're married filing jointly, just for making contributions to your retirement plans or IRAs.
Wow. Who qualifies for that?
Eligibility depends on your age. You can't be a full-time student or claimed as a dependent, and critically, your adjusted gross income. It's targeted at lower to moderate income savers. For instance, in 2024, the maximum AGI for single filers to get any credit is $38,250. It phases out as income rises. It can be a real game changer for building retirement savings.
That is a fantastic credit to know about. What about the Earned Income Credit? That's often a huge help for many families.
Yes, the Earned Income Credit, EIC, is another major tax credit for certain working folks, and it's especially powerful because it's refundable, meaning if the credit is more than the tax you owe, you can get the difference back as a refund.
Huge. How does it work for ministers?
Eligibility is based on your earned income and how many qualifying children you have. There are specific income limits that change each year. For 2024, the max earned income ranges from around $18,591 for someone with no kids, up to nearly $60,000 for someone with 3 or more kids, with higher limits if you're married filing jointly. Now, for ministers, the definition of earned income for EIC purposes includes your W-2 wages and your net earnings from self-employment, unless those earnings are exempt from SECA because you have an approved exemption.
Ah, okay, so the exemption matters here too.
It does. Here's a key point. If you have an approved Form 4361 exemption from SE tax, your earned income for the EIC will still include your W-2 salary, if you have one. But it will not include income from those non-employee ministerial duties, like the fees you get directly for weddings or baptisms. That income isn't considered earned income for EIC if it's exempt from SE tax. Understanding that can be important for EIC eligibility.
Got it. These credits in the savings plans really show that even with these unique tax situations, there are definitely significant opportunities, not just to file correctly, but to strategically lower your tax burden and really build for the future.
Absolutely. So let's try and tie this all together now with the practical side. filing the return, making sure all the T's are crossed and I's dotted, leveraging everything we've talked about.
Okay, the nuts and bolts.
Right. First, filing requirements. You absolutely must file an income tax return if your net earnings from self-employment were $400 or more. That's true even if your total gross income is actually below the normal filing threshold for most people. That $400 C earnings trigger is key.
Okay, $400 is the magic number there.
It is for SC tax purposes. You also have to file if you had wages of $108.28 or more from one of those electing churches, the ones that opted out of FICA. Now, for the key forms and how they fit in, calculating your Social Security and Medicare taxes. That happens primarily on Schedule SE, Form 1040. For ministers, even if you get a W-2, that salary usually doesn't have federal income tax withheld. So Schedule SE is where you report those earnings and calculate and pay the self-employment taxes. It's how you pay into Social Security and Medicare.
Okay, Schedule SE is central.
Very central. Reporting your self-employed ministerial income and expenses. If you have that side income, fees for weddings, etc., you'll typically report the income and deduct your related expenses on Schedule C, Form 1040. The net profit or loss from Schedule C then carries over to Schedule SE. Remember, if you're a common law employee but paying SE tax on your wages, you report those wages, minus allowable expenses, directly on Schedule SE itself, claiming those key income tax deductions. We talked about the deduction for self-employed health insurance and the big one half of your SE tax. Those go on Schedule 1, Form 1040, as adjustments to income. They reduce your AGI. And making estimated tax payments. Since your ministerial salary usually doesn't have income tax withheld, you'll probably need to make estimated tax payments during the year. You use Form 1040 ES for this. Generally, you should do this if you expect to owe $1,000 or more in tax when you file your annual return. It helps avoid penalties.
Right, paying as you go.
Exactly.
Yeah.
Now, one last point on exemption filing. If you do have that approved, Form 4361 or Form 4029 exemption, and you don't have any other income subject to SE tax, you actually don't file Schedule SC.
Oh, okay. What do you do instead?
You just need to make a clear note on your Form 1040. You'd write something like exempt Form 43631 or exempt Form 4029 on the dotted line next to Schedule 2, line 4, which is where SE tax would normally be reported.
That's a lot of detail, but honestly, it feels invaluable for making sure everything's filed correctly and, importantly, that you're not missing out on any of these deductions or exclusions that are specific to your role as clergy or a religious worker. And if someone's listening and feeling a bit overwhelmed, what about getting help?
Yeah, good point. The IRS does offer a lot of resources. IRS.gov is always the first stop for forms, publications, the latest info. There are also free tax prep options. The IRS has direct file in some states now. There's the free file program done through commercial partners and local volunteer programs like VITA, that's volunteer income tax assistance for lower to moderate income folks, and TCE tax counseling for the elderly.
Those are great resources.
They are. And of course, you always have the option to hire a qualified tax professional who understands these specific rules for clergy. But it's really important to remember, even if you use a preparer, the ultimate responsibility for the accuracy of everything on your tax return always rests with you, the taxpayer.
That's a crucial reminder. Well, we have definitely navigated the twists and turns of Publication 517 today. It really highlights just how unique these tax rules are, from getting that SECA versus FICA difference straight to understanding those powerful exemptions and really maximizing things like the housing allowance. This deep dive shows how much power there is in specific knowledge.
Yeah, my hope is really that you, listening, now feel like you have a clearer map. Not just, getting the forms filed, but for making those strategic financial choices that can genuinely impact your well-being, both right now and for the long haul.
So what does this all mean for you? Maybe consider this question. How might a deeper understanding of these very specific provisions going beyond just filing the return, how might that empower your long-term financial planning? Thinking about retirement, savings, even your charitable giving. How can you transform just complying with tax rules into a powerful tool for your future financial security? We always love going on these deep dives with you. Until next time, keep digging for those nuggets of knowledge.